Good morning, Paul Georgie from Allendale. It's July 19th, Friday morning, and grain markets backing off a little bit further in especially in the corn complex. As currently there's on the radar maps a system that's setting on the Iowa-Minnesota border, expected to move across the corn belt here over the next several days, and that's driving this new crop corn and putting some pressure on it. As we go into the weekend, I think the big focus is going to be how much rain we actually get and what the forecast is going to be come Sunday afternoon, Sunday evening when the markets reopen. That's when the volatility and the fireworks could actually begin. If we get good amounts of rain, it's likely we're going to see some pressure in the market. If the rain does not amount to what the forecasters are looking for, we could see some sharp rallies in the market. So Sunday evening could be when the fireworks really hits the grain markets. Other news that we got to talk about here this morning: China has closed for the week, and their soybeans are down about 16 cents on the week. We've got crop rating talk and estimates. Some are thinking we could see a 1 to 3% decline in crop ratings come Monday afternoon. A lot of that is going to still depend on what kind of moisture we get here over the weekend in the next 24 to 48 hours. The forecast this morning looks like they're putting more moisture in also for the 6 to 10 day period, and areas of western Iowa, northwest Missouri should get a sizable amount of rain if this 6 to 10 day forecast comes true. The export data yesterday shows that we are now we've got more soybeans sold than what the USDA's target, with several weeks of marketing year left. So that will need to be adjusted here by the USDA on the next supply-demand report. And as we've been talking about, the NOPA crush and the export sales continue to be greater than U.S. targets and in the numbers that they use in their balance sheet. So soybean supplies are extremely tight. However, basis is continuing to slide. We've seen western soybean basis deteriorate again yesterday. The main reason there is the processors are shutting down. They're doing their seasonal upgrades to their plants. That in turn is, and simply because they can't get the supply of beans to continue to operate. So that's a factor that we've got to be watching closely as well. In the wheat market, South Korea tendered yesterday for 60,000 tons of wheat. Overnight announced that they bought that out of the Black Sea region. Yesterday, Egypt bought 300,000 tons out of the Black Sea region from Russia, Romania, Ukraine. The price on that wheat is still $100 a ton less than what U.S. prices are. So they're migrating to that area. We need to to make some adjustments in our pricing, or in order to get back into the world market, is what this is telling us, and something that we're going to have to deal with here over this next marketing year. In the livestock trade, cutout values were lower on beef, down 14 cents, down 5 on select. We're still waiting for a cash cattle trade to develop. The pork cutout values were down 127, continuing that slide. However, the tight supplies of cash hogs continue to hold the cash market firm. August futures continues to find support simply because of its $5 discount to cash, with only a few weeks away before that contract goes off the board. We do have a cattle on feed report this afternoon. Trade's expecting 97% on feed, 94.7 placed, and 94.5 marketed. The marketing number is the number we're here and talk about, and that we didn't meet a year ago's slaughter levels. That is a concern, and that's a number that's going to be watched closely on this report. So as we go forward into the weekend, we suggest staying in touch with Allendale's brokers and research team. If you got any questions, you can reach us at 800-262-7538. We wish everybody a very successful trading day. We'll talk to you on Monday morning. Thank you.